Hello, and a massive hello to everybody. Hope everybody's having a great weekend wherever you may be, whatever you may be doing. 19th of Feb 2017. No trade calls, no recommendations, or response for their own stuff. We're here for educational purposes only. So remember, U.S. markets closed tomorrow. Happy long weekend to everybody. So what's going on? What to expect this week? I mean, apart from the fact that, side note on FX, we do have quite a lot of stuff out of the RBA. So concerning Aussie, on Wednesday, we do have the second estimate GDP out of the UK. So, something that will affect GPB too. The main thing to look out for this week, again, is that Wednesday mark, where we are going to get the FOMC minutes, and that's got the biggest potential to cause us to send some waves out and cause some moves. Really, what I wanted to discuss here is, there's one thing that's driving the market. The key thing happening now is what's going to happen on the dollar, and that's going to have an impact. Okay, what's happening on gold markets, etc. But there's two charts that really, I think, really help put that in perspective, right? And that's, if we're starting on here with the dollar chart, right? You see, we were looking at this upside rotation. If you move on to a weekly chart, right, you're seeing basically this is the big rotation higher, the big breakout above this 100 mark, right? And if you remember what we said at the beginning of the year, is we said, hovering at 103, we said 100 before the 105. So as initial correction, and then we'll have to, it's time to get to make a decision. And that's exactly where we were hovering, right? Healthy retracement. Big question is, even in an uptrend, are we going to correct all the way back down into these moving averages, into this ascending trend line before we move higher, right? Or are we just going to move higher, right? In any case, of course, market could go down, but the options are still, these are the two interim options, right? This is the bigger resistance, and this is the bigger support, right? We're boxed into this area, so that's where we are. And what's happened so far, if you go back on, if you move back, switch on a daily, right, what we've seen is basically, there you go. You've had that nice reaction into the 100, very orderly. We reversed back up into the 50 back of the move from A to B, and also confluence with the 50 DMA. Okay? So, and we got a nice negative close. Beautiful little confluence, nice little short. So this is where we are talking about, go, game on, right? What's going to happen? That's the key right now. So as long as we hold this area, the expectation, so that means by hold, we mean we don't get a day close above. The expectation is for this to be resistance and for the market to try and come back down to that zero. Then that's going to be the pivotal level for a little bounce, but possibly for that bigger correction all the way back into the 123 extension of this move from A to B, right? So that's the key level. So shorter term, if you remember on the weekly, this was the level to look at to the upside, and this is the level to look to the downside. If you're looking at it in terms of the daily, where that shifts a little bit, right? The daily, the resistance is this 50 back, and the support is the lows we made below that 100. And that's where we're stuck. And that's what we have to see. We have to wait for this to play out. And as we said, potentially Wednesday, that's the day where we'll get some kind of traction. And what's particularly interesting is, if you look at the Euro USD, on the daily, right? Surprise, surprise, dollar index, mainly made up of the euro. You've got exactly the same dynamic that's at play, right? You had that correction off those lows. Remember, we talked about this euro chart for a long time at the back end of last year, saying basically we don't understand how you'd want to get short euro into those lows where you got a lot of opportunity to correct back to the upside, right? Followers of the blog are familiar with that chart, right? But if you look at this euro here back on the daily, what's happened, right? Mirror image to what's happening on the USD chart, right? Euro move up, A to B, right? And now we put in that positive close, the confluence at the 50 DMA and the 50 back. So on the daily, this is the support now, and this is the resistance, and we're stuck inside this area. So trying to complete this all the way back into that 123 extension. So that's where we are, right? So, you know, you can look at different indicators, keep on changing time frames, but it's not going to change the fact that we're kind of stuck, right? And something has to give on these charts. Now, so again, I wish I had something more interesting to offer up, but I think that's the key dynamic that's going on now. In terms of the equities, the most interesting is to see if ES manages to break recent highs or not. If you remember, you know, we've been talking about a healthy correction, but if you go back to end of last year, we said, you know, the first, you know, all in terms of cyclical point of view, you know, it made sense to look for some kind of a top in the back end of February. So I think a lot of people are going to be talking about that. So we'll have to see what happens. We continue to be positioned long gold, long bonds, long silver. Those are working out quite nicely. And again, just a little update, because we've been talking about this is the short on cable, and we were talking about that 124 being a really important zone from a day close perspective, right? And you see that essentially what's happened is that it's still holding, right? It's unable to close below there, but it closed quite heavy. So here we'd expect, especially early on in the week, we expect that 124 to get tested again. We expect that 124 to get broken. We expect to see a close below that 124. And for this week, we've got a little change of plan. Our bull bear line is no longer going to be the 124. Our bull bear line is the 123 mark. Okay, so that's just a little update for people looking at that GPB, but that's the level, that's the big pivotal level for a false break to the downside and a bounce, or for a continuation lower and a move back to those bigger targets to the downside. Okay, hope that was useful, guys. Again, if you want to, I'm going to be trying to do this week or next week just an open access morning call, just a video call to go through the charts into London Open, just to, you know, pay it forward. Should be fun. A lot of people like to know what we're looking at going into the day early, so I'm going to do that. I'll post a heads up on Twitter about 10 minutes before we open up the room. And if you want to make sure you don't miss the post, the easiest thing is just to sign up on the blog, because you'll get an email with the link to the room and a reminder. Again, it's just a free access chat between friends and family before or around London Open one of these days, this week or next week. If we get enough people in the room, people like it, I'll try and make a habit of doing it at least once a week. Okay? Have an awesome one. Talk to you soon. Thank you so much for all the likes, retweets, comments, the support. As always, very much appreciated. Take care. Talk to you guys soon. Bye-bye.